So we're gonna get into everything and stay till the end. We're gonna give you something that I've never seen before. Before we get into this video, make sure to like, share, and subscribe. And if you like this video, give us a comment. If you don't, let us know too in the comments below. So what is seller finance? Well, in a traditional transaction, you either need to pay in cash or go to the bank and get a mortgage. But with seller finance, you don't necessarily have to do that. That's where they actually front you the property up front and you write an IOU 50 or 100K, whatever that is down the road. Now, the only thing you want to make sure is that it's free, clear, and standing. Get title work, make sure there's no additional liens on that. But you could get a personal note and they just loan you the property and you make monthly payments until it's paid off. Many situations where this makes sense for both people. Or you could go subject to. So subject to mortgage is where somebody has a mortgage and they're trying to get out of it. They don't want to make their payments. They're trying to just move on with their life. And that's where you don't get a new mortgage. Because why would you get a mortgage paying interest to pay off someone else's mortgage with other interest? The only person making money in that is the bank. So you could just take over their mortgage subject to and just make payments and that's all good to go. You got the house, no mortgage needed in your name. And thirdly, you could buy things in a trust. A reason to put things into a trust, specifically a St. Germain trust, they can't accelerate your loan and make everything due. They can't foreclose on your property, so there's many benefits for that. But you could either go personal note, you could subject to, or you could buy it in a trust. So why would you want to do a seller finance deal? Well, oftentimes it's cheaper, it's easier, and it's a lot more flexible, and it can save you, the buyer, and the seller a lot of money. You see, if you're selling a property and you have to pay a lot of capital gains tax, this gets deferred in payments throughout years where you pay less money in taxes. So sellers can like this, and as a buyer, you could buy somebody's interest rate back in the day when it was really cheap. When people had 3-4% interest rates and they want to get out of their mortgage, you can get really affordable rates where you can't right now if you want to do that on the market. The only way to do that would be a seller finance or a subject to deal. How to execute a seller finance deal? Well, the first thing you need to do is talk to a title company. Not every title company will help you with this deal, but a lot will. If you ask them, hey, can you help me with a seller finance purchase agreement? They'll write this up in contract and verbiage to where everything protects you. And this is very important. You need to give them all the descriptions, everything you negotiated, because if you don't do this now, you could completely lose the deal. So it's very affordable. You talk to a title company and you don't pay them until the deal is actually closed. This is part of the process. They help you close the deal if you don't have a realtor, or if you're not a realtor or you're not a lawyer. So talk to a title company and get set up so you know how to execute this deal. Who are good candidates for seller finance deals? Well, starting off, look at people who have a lot of properties, look at people who have a lot of units, or a big portfolio, because when they go to sell this, if they're making millions of dollars on this transaction, they're going to be hit with a really big tax bill, hundreds of thousands to millions of dollars people will pay sometimes in taxes if they sell in cash. So believe it or not, seller financing deals are actually more popular with bigger transactions. And when you go into multiple units, people are familiar with this and they do it for tax breaks. So look for people who are trying to sell a lot of properties. Number two, look for people who inherited properties. People who got these properties for free or close to no money, they're going to be paying a big capital gains tax. Look for people who got properties a while ago. Look for people who got properties at a really cheap discount, because these people, when they sell, they're going to have to pay a lot of money in taxes. It's another incentive why they might want to seller finance. Now, not everyone's going to want to seller finance. If they need cash now, you're not going to be able to seller finance them and tell them, hey, in 5 years, 10 years, I'll pay you. But there's a lot of people who have money and they just want to make sure that it's their assets protected, they're making payments, and they're slowly making their money back. So another criteria, look for people who have, one, low interest rates, or two, they can't pay their mortgage, or they have high taxes, they're distressed, they're looking to get out of their situation, maybe they're looking to move, they just lost their job, they have to go. Distressed people sometimes don't have any other solution except for what you give them. So if you have somebody who really needs to move out of town, they're going to be open to seller financing if you're giving them what they want. And a lot of times, like, people will have deals where they got a house for 100 grand and they're selling it for 120 grand. And after realtor fees, they're only making 10 grand. So rather than get a mortgage for 120 grand, you talk to the dude and say, hey, what if I give you 10 grand and I take over your payments and pay off your mortgage so everything's taken care of? You get the same amount of money and I don't have to put as much money down. It's a win-win both sides. Go after tired landlords, people who had bad tenants. They might have wanted to be landlords and now they're looking to get out of the business. Well, they might still like to have that stream of income while not managing the property. So that's a perfect criteria where you could help somebody out and you're still giving them what they want. They just don't want that work that you do want. And on top of that, anybody could be a potential candidate for a seller finance deal. You really just have to ask them. Anyone who owns a house might be willing to seller finance it, but if they need money, they won't do it. But not everybody will, but it's worth a shot. So seller finance math, what should you offer? Well, you still gotta know your comps. You still gotta know what the properties are worth. If you don't, check Zillow, check the last 90 days, and ask an experienced realtor if you don't know anything about the market. Once you have an idea of what this property is worth, you still gotta buy it profitably. You can't buy things at a loss. So you can negotiate the terms, the interest, the purchase amount, and even the title. And all this is very important when you're getting into a deal and how you're evaluating it. But at the end of the day, you don't want to get into something that you're losing money on. So you want to have it at least cash flowing. I'd say at least $500 and paying off your payments every single month. If you could be making a little bit of money and paying off the seller, you're still getting an asset for free that the tenant's paying for. So if you could make a little bit of money and find a win, great. But if you're going to be losing money in this, if it's vacant, if it needs a bunch of work, I wouldn't go for that at all. So how does the title work in a seller finance deal? Well, this is negotiated. The seller could have it or the buyer could have it. And this is very important. Typically, the seller would hold on to title until the last payment is made and then the buyer receives title. However, that could be completely negotiated and the buyer gets title up front. This is important though, because whoever has title has a lot of control on that property. And if the buyer stops making payments but has title, the seller now has to sue the buyer. But if the seller keeps title, then he can kick out the buyer whenever he wants and void the contract if he doesn't make a payment. So this is very important to know because you might want to seller finance sell a deal or you might be wanting to buy it. And either way, you want to structure it so it best suits you and helps you out the most. So if you guys have made it this far, here is the secret script to buy seller finance deals. So starting off, you give them 3 offers. Offer number 1, a high purchase price, higher than they might expect, with 0 interest. Offer number 2, an average price, average interest. Offer number 3, a low purchase price and higher interest. And they pick what makes most sense for them, and either way, it's a win-win for you. Make sure all of those offers cash flow to you, and you can't lose when you offer these. How to handle seller objections. The number one thing sellers ask is, how do we make sure this is a legitimate transaction? Well, we hire a title company and a notary. They record a promissory note that shows that we owe you X amount of dollars within X amount of time period. A lot of times sellers will ask, how can I be protected? And this is where we might give them a bigger down payment to incentivize them, show them the comfort that, well, if we do leave and don't make payments, you at least are going to make this amount of money. It's more than the rent they'd be assuming elsewise, so they have a little bit more comfort. The next thing they ask is, well, what if you don't pay? What happens? And that's where, well, we could write everything up so you get the property. That's what I do when people ask. I give them full disclosure and I say, you know what, if I don't make payments, we'll put this in the document that you get the property back. But truthfully, I've never ran into that situation. But this is important to know because if you're selling a property or buying a property, this could be hid in the contract and you do not want to get screwed. Seller financing real estate is very particular. It will take reaching out to a lot of people until you find somebody who's willing to seller finance their property. And on top of that, it will take a couple months of building a relationship and actually carrying out this transaction. And sometimes it will take years to actually close on the transaction if it's a long-term payment. But if it takes reaching out to 500 people to find someone who wants to sell their property to you on terms, I think you should do it. It's a great idea, and there's a lot of people out there who would, and you'd be the perfect buyer for them. The number one problem in real estate that beginners and advanced real estate investors have is capital. You know, starting off, it becomes about finding deals, and it's hard to find deals, but once you get good at that, eventually deals come to you, and then it becomes about capital and being limited on capital. I mean, you can only scale so far so fast until you learn seller finance. And this is why we've incorporated seller finance within our business, because now we could buy properties every single month without having to go to the bank, without having to get a mortgage, and without having to put a bunch of money down. And if you guys want to learn more, follow, subscribe, and we are going to be teaching you new techniques and how to get more properties, better deals each week.